All right, we'll go ahead and get started. My name is Sarah Patterson and I'm with Who's Well. So we definitely welcome you to our presentation today, which is understanding your flexible spending account and health savings account. And we have Sherry Schilling, who is a presenter with Chard Snyder that's going to talk with us today. So just a couple of things that I wanted to just make everyone aware of. Everyone is currently on mute, so I'm just going to keep everyone muted as well. And one thing that we are going to do towards the end of the presentation is that any questions that are entered into the chat feature, Sherry will certainly answer those at the end of the presentation. So if you have any questions at all that you would like for Sherry to cover, or maybe you didn't hear, just go ahead and pop those into the chat and we will get to those. All right, I will turn it over to you, Sherry.
Okay, thank you. Good afternoon. As Sarah mentioned, I'm Sherry Schilling. I'm with Chard Snyder, who is your flexible spending account and health savings account vendor. And that's what I'm going to talk to you today about, are those two different types of accounts. So a flexible spending account, what is that? And I'm going to call it an HS or FSA rather than the flexible spending account, just to make it easier going forward. So just remember that FSA is flexible spending account. It's a voluntary account that you can use to set aside money for eligible healthcare expenses or dependent daycare expenses. The benefit of this account is that the money is pre-tax, comes out off of your paycheck before taxes, so you're saving money on those expenses that you would normally have anyway. How can you save money? Well, here's a chart that lets you know that you can save up to 40% on those taxes. So in this example, a person with monthly pay of $2,000 contributes $100 a month or $1,200 a year to a flexible spending account, could save $30 a month or $360 a year in taxes. And again, these are expenses that you're already incurring for either healthcare or your dependent daycare costs, so you might as well have a tax savings on those. In order to make a decision as to whether or not you want to use this account, one thing that we do have available on our website, if you go to chard-snyder.com and click on the support center under tools and apps, you can find our tax savings calculator. Feed in some numbers based on your income, your tax bracket, and how much you want to contribute, and you can determine how much in tax savings you would have for the year. That can help you tremendously in deciding whether or not you want this account. We do have three types of flexible spending account, and I'll go into each of those here. First is a healthcare flexible spending account. This account is designed to help you save taxes on those items that are considered healthcare in nature, and those include your medical deductibles as well as coinsurance, your co-payments, prescription co-payments. It can also be used for dental expenses such as teeth cleanings and oral exams, orthodontia expenses, as well as vision expenses, including eyeglasses and optical surgery such as LASIK. If you've been in this account previously, the Healthcare Flexible Spending Account, the IRS does regulate this, and the expenses that are considered eligible are based on what the IRS list does provide. In the past, over-the-counter medications were eligible under a flexible spending account. However, you needed a prescription from the doctor on file with Chard Snyder in order for you to use the account for this, and your debit card was not available. With the CARES Act that was signed in March of this year, that actually went away. So that is something that is available now to those people that have the 2020 Healthcare Flexible Spending Account, and then going forward that you can use this account and your debit card to pay for those types of things that are considered over-the-counter medications. And those include things like allergy medications, cough syrup, those types of pain relievers such as ibuprofen and Tylenol, those types of things. And then additionally, the CARES Act actually gave you a tax break on feminine hygiene products. So those types of things can be purchased using your flexible spending account as well. And again, if you're in that account currently, the Healthcare Flexible Spending Account, that actually goes back to January 1st of 2020 that you would be eligible. So if you've not claimed the expenses for that and you do have some money in your account and you do have those receipts, you can submit those for reimbursement, or just remember going forward for the rest of this year and then again in 2021, you can use your debit card or your flexible spending account to purchase those types of items. The other type of flexible spending account is a dependent daycare flexible spending account. This is eligible for you to take care of those dependents that you have that are age 12 and under, or for your tax dependents who are unable to care for themselves regardless of their age, so the elder care. And this is allowing you and your spouse, if married, to either work or go to school. So you can use the account for those types of expenses, and those include, as I mentioned, the daycare for children as well as nursery school, as long as it's allowing you to and your spouse, if married, to work or go to school. After school programs are eligible, as well as those summer day camps that are allowing you to work. Anything that is you're using the child care while you're not working, such as a date night, those are not included. And they do include daycare centers as well as in-home care. For the senior daycare or elder care, you do need to have that person be your eligible tax dependent. So you would need to discuss that with your tax advisor if you're unsure of whether or not that qualifies. Another type of flexible spending account is called the limited flexible spending account. This is a complement to your health savings account, which we'll discuss a little bit later, but it is limited to only dental and vision expenses. As I mentioned earlier, the full healthcare flexible spending account, you could use it for medical, dental, and vision. The medical is not available under this because that is available under your health savings account. The IRS has that restriction so that you're not double dipping. But for those people who are in the health savings account, this is a great way to maximize your tax savings, because you can use this account and have it specifically for those types of expenses that you think you might incur under dental and vision. So let's say everybody in the family needs glasses next year. You are expecting an optical surgery such as LASIK, or you have one or more dependents in orthodontia. You can earmark this limited flexible spending account for those types of things, get the tax savings on those, and then use your health savings account for your medical items, or use it for savings for the future. And I'll go into that a little bit later. The flexible spending account, because it's regulated by the IRS, does have a few rules. One of the rules, and you may have heard these accounts referred to as use it or lose it. Basically, you must use all your funds by the end of the year, or you do forfeit those. Again, that's an IRS regulation. The nice thing is that the IRS does allow employers to offer a grace period, and UVA has done this, which means you have an additional 2.5 months after the plan year ends. So after the calendar year ends, at December 31st, if you have money left over, you can go to March 15th of 2021 in order to use those and actually have the dates of service in 2021. So this example is, let's say you have $50 left in your flexible spending account for 2020, and it's December 31st, you don't have any more expenses that are eligible in 2020. But in 2021, you have an urgent care visit that costs you $350. You can use the $50 left over from 2020 to help pay for that. That way it will zero out your 2020 account, and then if you had enrolled in 2021, then the remaining $300 would come out of those funds. So that gives you a little extra cushion. You do want to budget very carefully though, because again, the IRS rules state that you must enroll in this account at the beginning of your year. So your open enrollment that is going on this fall for calendar year 2021, you decide how much you want to contribute. You may want to use our handy worksheet that kind of estimates those types of things that you would be eligible and help you decide how much, and that is again on our ChargeSnyder website. But think of those things that you are fairly confident, or actually really confident, that you're going to need or use for the calendar year 2021 for you and your family. Even if they're not enrolled in your health plan with UVA, but they are your family members and your tax dependents, you may use the account for them. So look at those things like, how many times do you go to the doctor, and what are your co-payments, and how are you going to be having any planned surgeries next year? Those over-the-counter items, how many of those, and what's the amount that you would spend, and add that all up, because you cannot make any changes until the following calendar year, or if you have a qualifying life event, and that is those types of things that is adding to dependents, such as the birth of a child, or dropping a dependent. Let's say somebody's dropping off because they are no longer your dependent and they've got their own insurance, so a child leaving the nest, so to speak. Also, with the dependent daycare account, a qualifying event does include you changing your daycare option. So let's say you're currently in a full-time daycare and you are now only needing part-time daycare because your child is going to go to school part of the time. You can reduce your daycare expenses in your daycare account. Or if you change daycare facilities and you have increased or decreased your costs, those are considered qualifying events. But other than that, you need to be pretty confident in the amount that you're going to spend for the year. The daycare account tends to be a little easier because you have those costs and those are pretty consistent. But that healthcare account, keeping in mind that you do have that additional 2.5 months, but you don't want to always be catching up and using that grace period if you are enrolling year to year. So you want to be pretty accurate in what you're using. If you're new to the account, I would suggest doing a small amount. The minimum is $120 for either of those accounts, the healthcare limited flexible spending account or the dependent daycare account. That's only $10 a month. And try it out and see if it works for you. And then maybe if you run out of money very quickly in the year, then for the following year in open enrollment next year at this time, you can maybe increase that. You can only use the account for those eligible expenses. So there is a list on our website, again, CHARD, C-H-A-R-D, Snyder, S-N-Y-D-E-R.com. Look for those eligible expenses under those flexible spending accounts and make sure that you're budgeting money for those types of things that are eligible, and you're not putting a bunch of money in there for something that is ineligible. If you can't find something that is specific to you, that's not, and that's, you can't find it on the list, please give our customer service a call and they can do some more research. Because you are receiving this money pre-tax, meaning it has not been taxed before your deduction, you get an automatic tax deduction on this so that you cannot double dip and then claim that later on your income taxes. So do be aware that if you typically claim healthcare expenses or the dependent daycare expenses on your taxes, you won't be able to use both for that. I'm now going to talk about the health savings account, which is a little bit different. It is a complement to your enrollment in your high deductible health plan. So you have a couple different options as UVA employees on which health plan that you pick. And if you pick the one that is the high deductible health plan, then you will automatically be enrolled in a health savings account by CHARD Snyder once you enroll in this plan, and that will be effective the following January 1st. Health savings account is a little bit different than a flexible spending account in that it is actually a personal bank account, and we set up a savings account in your name. But then those types of expenses that you can use it for are very similar to that healthcare flexible spending account. There are thousands of eligible items, and similar to the flexible spending account, we have that list on our website. The money that you are contributing does come off your check on a pre-tax basis, and it is a voluntary contribution, so you're not required to contribute to the account, but you do save taxes. And you can save taxes on this account in a triple tax savings, unlike the flexible spending account. So your first tax savings is your tax-free contribution. So if you're contributing $100 a month, that comes off your check pre-tax. It also goes into an interest-bearing savings account. And so those earnings that you're earning on that interest-bearing checking or savings account are tax-free. And then when you use the amount for eligible expenses, so you use those funds for your eligible healthcare expenses, you're not paying taxes on those. So those are tax-free payments as well. So you really do get a really good tax savings. And we do have a tax savings calculator on our website for this account as well. We set up a HSA Advantage, which is the name of our health savings account, for you automatically when you enroll in that high deductible health plan. And as I mentioned earlier, you own the account. So it is a bank account in your name. You do get contributions from your employer, or you can get contributions, and I'll talk about that in a minute. So you want to factor that into how much you're saving. You do have an investment opportunity, even besides that interest-bearing savings account. You can use the money now, or you can save the money for retirement, because unlike a flexible spending account where you really only have until March 15th of that following year to use the funds, the money is always yours. So once the money goes into that health savings account, the money is yours for your lifetime. And you can decide how you want to use this money. You can use it now for those eligible expenses, but if you want to use this as an additional savings for your retirement, you can just save the money there, and then at a later date, get reimbursed for those eligible expenses. And so you really have control over how you want to use the money. And in fact, once you each reach age 65, if you use the health savings account funds for expenses that are not considered healthcare and qualified under the health savings account rules, you can still do that, and you don't have a penalty. You only have to pay additional income, income tax on that. If you do that prior to age 65 and say use those funds to buy a TV, you are have a 20% excise tax penalty, plus you owe those income taxes. So again, it allows you to have contributions and control your money the way you want to. But not everyone is eligible for a health savings account. The most important eligibility is that you're covered under that high deductible health plan. So again, that one we automatically would set up the HSA for you if you enroll in the UVA high deductible health plan option. But you do need to look at some of the other qualifications as well. Are you enrolled in another health plan? That could be either through a spouse, so you have double coverage, receiving veterans or military benefits such as TRICARE, or even if you're enrolled in Medicare, and even so if you're age 65 or enrolled in Medicare, even if it's just Part A, you are not eligible to contribute to a health savings account. So you want to make sure that you're factoring that in before you do your enrollment. You also cannot be enrolled in a full coverage healthcare flexible spending account rather than a limited one. And that's even if your spouse is, that maybe works for a different employer. If they are enrolled in a full healthcare flexible spending account, that disqualifies you for that health savings account contributions, because that person, your spouse, can use those flexible spending account funds for your expenses. So that is considered double dipping by the IRS. So those are some things that you might want to coordinate if you have a spouse who works for a different employer and has some of these same benefits. You can each have a health savings account but you can't have a full flexible spending account. You also, if you happen to have come from a different employer and are enrolling mid-year for your health savings account through UVA, you cannot be maxed out under your other health savings account. And I will talk about that in a moment about the maximums that you can contribute. So there are two types of contributions that go into your health savings account, employer and employee money. And the real benefit to this as a UVA employee is you can receive from your employer up to $1,000 for single coverage and up to $1,500 if you have family coverage. And that is available to you in monthly contributions as long as you complete some wellness activities. So Be sure to check to find out what those types of things are, but as long as you do complete those, then you can receive that maximum amount of $1,000 or $1,500. And then you can choose how much you want to, if any, contribute to your health savings account, keeping in mind that whatever you contribute comes off your check on a pre-tax basis. So you get that tax savings immediately, plus it's added to the balance of your health savings account that can be invested and have those tax-free earnings. So you may want to, I highly recommend at least starting out with even a minimal amount, because that can be changed at any time, and you want to start a little bit low and then maybe bump it up as things change during the year. You're finding that because of those tax savings that you're really not missing that amount, or you know that something's coming up that you want to save for, so a type of healthcare expense. The IRS does limit how much you and your employer can contribute to that health savings account in any given tax year. For those people who are currently in the health savings account, that's just a reminder of what the single and family limits are. They do increase them usually each year, and they have for 2021. So if you are under single coverage, that's $3,600. Again, employer and employee contributions, so make sure you factor that in, how much you're getting from UVA or what you expect to get from UVA. And then $7,200 if you have family coverage. And when I say family coverage, that means anything above a single coverage. So if you have one person covered, you're under single. If you have more than one person, whether it's employee plus spouse or employee plus children or a full family plan, those limits are based on family, $7,200. And for those employees that are age 55 and older, you do get an additional $1,000. That they consider that catch-up contribution. So add $1,000 to that amount, those amounts. So that's $4,600 for single and $8,200 for family, so that you can really maximize your tax savings for the year. What types of expenses are eligible under the health savings account? As I mentioned earlier, very similar to the flexible spending account. So those healthcare items such as deductibles, co-pays, co-insurance, orthodontia, so all up, and dental and vision expenses. So buying those glasses, using that orthodontia if you're not going to do that limited purpose flexible spending account that I mentioned earlier. The same expenses that are now eligible under the CARES Act, so those over-the-counter medications that no longer require a prescription and the menstrual hygiene products, those are eligible under the health savings account as well. Some additional items that are eligible under the health savings account that weren't eligible under the flexible spending account do include Medicare premiums. So if your spouse is paying for Medicare, you're not under Medicare, but your spouse is 65 and older, or you're paying Medicare premiums, you can use that health savings account to pay for those premiums. So that's an additional item. Again, visit our website. And you do not need to log in to get any of these tools and resources to find out what expenses are eligible under the health savings account. I mentioned earlier that the health savings account funds are automatically going to an interest-bearing savings account. But once you reach a minimum balance of $1,000, you can begin investing that money. So that is another way that you can add to that health savings account balance. And those investments you do earn tax-free. So once you have a balance over $1,000, you can go into your account, an online account through ChartSnyder, and invest in mutual funds. And those investments can be changed at any time. Anything over $1,000 would be the investment. They always keep $1,000 in what they consider the cash account that you can use immediately when you're using your account. So that's just another way to add to that retirement savings or savings for the future under the HSA. So we have a wide variety of resources available to you no matter which account you're in, whether it be the flexible spending account or the health savings account. We have a mobile app. I'd mentioned many times in the past about our ChartSnyder website. So there are a lot of tools and resources, calculators, forms that you can use. And once you're set up with the account, if you're new to either of those two accounts, you can immediately on January 1 set up your online account. You can also download the mobile app and get that going to use to manage your account. We also have a customer service line available to you, either via phone, or if you're on our website, you can do a virtual chat. So you can have those if you have any specific questions. What's really handy about some of the resources is that you're able to do things like set up your direct deposit, set up for your reimbursements. You can also, if you're in a health savings account, I highly recommend that you complete the beneficiary form for that, because it is a savings account in your name and you have that for your lifetime. So it's great to have a beneficiary file for that. You can also access your claims if you have any of those, and I'll explain how to do that in a moment, as well as find all those resources that I mentioned earlier, the tax calculator and the handy worksheet to figure out how much you want to budget into your account. One additional resource that we do have available is we do have the FSA or HSA store. So you go to FSA store, all one word, .com or HSAstore.com. It is actually the same website, and they only sell those items that are eligible under the IRS qualified healthcare expenses under the IRS regulations. So there's no second guessing. And unlike if you went to Amazon and tried to buy those items, you wouldn't know if those are eligible or not. They only, FSA, HSA store only sells those items. So you could buy those over-the-counter medications. A lot of other over-the-counter items such as sunscreen or Band-Aids and first aid kits, as well as those menstrual hygiene products, and a lot of medical equipment such as CPAP machines are eligible under it, and they do sell those. So keep that in mind if you, especially at the end of the year or end of the grace period, you still have some funds left over in your flexible spending account. Go ahead and use that. If you have a minimum of $50 in your shopping cart, that they will ship for free. So that is a wonderful option, especially for those last minute things that you would need to use that money up if you're in a flexible spending account. And you can use your debit card for that. So once you enroll in a flexible spending account or a health savings account, you will be sent a debit card from Charles Snyder. If you're already in those accounts, we still are using the same card. If your card happens to not look like this one, if you've been in the account for a while and it's a red card, that card is still good. We just changed vendors and we have a new look. But the card is good for 5 years. So once you look at your card, if you're getting close to being expired, we will automatically send you a new card. You don't need to worry about that. But it's just a great way to pay for those eligible expenses. You're at the pharmacy and you're purchasing your prescription and maybe some over-the-counter items. You can automatically just use that debit card for the flexible spending account or for that health savings account. At the daycare center, if they do take a debit card, you can use the card for that as well. Even if you're using the card, we do recommend that you save your receipts, especially important if you're in the health savings account. With the flexible spending account, Charles Snyder is the one that is verifying and those qualified expenses. Every once in a while, sometimes you'll use your debit card and then not enough information comes to us electronically, and we would need to see that receipt just to make sure that it's an eligible expense. And what we call that is substantiation. So when you are in your account, if you would please update your email so that we, because that is the way that we typically would reach out to you. We will email you and ask you to substantiate that. Most often that does happen when it's dental expenses. For some reason, many dental offices send through electronically when you've had a dental procedure and you're using your debit card. Not much comes over it. And it's so generic that we cannot determine whether or not it's eligible. There are quite a few things that a dentist can do, such as teeth bleaching, teeth whitening, that are not considered eligible expenses. Anything that's cosmetic in nature is ineligible for the IRS. So we would need to substantiate that. So save your receipts until the end of that plan year. If we haven't asked for anything, then we have enough information. If you do have that receipt or you're not able to use your debit card, you do need to file a claim for distribution. Make sure that receipt has these 5 different items on there: date of service, the recipient's name, description of the service, the provider information, and the amount you owe. So many times that sales receipt from the pharmacy is not quite enough. So you want to make sure that you have a receipt that has enough information on it. And then you can file a claim. You can file a claim using the mobile app, or you can send it to us via U.S. mail. You can also fax it in, or you can also scan it and use the website. I think the mobile app is the easiest. You can just snap a picture on your phone of that receipt and send it through, and it's very few clicks in order to get that done. If you're in the flexible spending account or your health savings account, I highly recommend that you set up a direct deposit account. So if you do need to file a claim for your flexible spending account, then instead of sending you a check, we will direct deposit it. So that just makes it a lot faster for your reimbursement. For your health savings account, I mentioned earlier that Charles Snyder and the flexible spending account is kind of your IRS eligibility gatekeeper. Under the health savings account, you are your own gatekeeper. So if you're using the health savings account, whether you're using the debit card or you want to file for reimbursement, which is basically filing a request to get some money back, you need to make sure that you're saving those receipts, because you would need to substantiate your use of that HSA fund or that distribution from your health savings account if you were ever audited by the IRS. The receipt needs to have that same information that that's on the screen. So those dates of service, recipient's name, description, provider, amount you owe, your explanation of benefits from your healthcare or dental provider or vision provider. It usually has all that information on it. But what I do is I save those and put them in a file so that when I use the debit card or requested a reimbursement for something that I wasn't able to use the debit card for but would be eligible, it's in a file labeled HSA 2020. So then if I'm ever audited by the IRS and they say, okay, substantiate, tell me that you use those funds for eligible expenses, I can just pop those out. You can also do that if you're using it for future expenses. So if I'm saving my health savings account and not using it while I'm incurring those expenses, but I want to use it maybe 5 years down the line when I'm retired and I want to have lower income, so I want to use that health savings account almost like an IRA to pull funds out when needed, I can use those funds as long as I was under the health savings account at the time that I had the expenses. So that is something that you can use. You just need to make sure you save those. And you can save the actual paper or you can save them electronically as long as they have that information on it. And again, that direct deposit, if you set up a direct deposit and request for distribution, we will have that on file and then it will immediately go into that account rather than waiting for that check to come in the mail. I mentioned the Charles Snyder app. I really highly recommend this for any of those accounts because if you're at the pharmacy and you want to know how much is in your flexible spending account, you immediately can pull that up in an app and you're just using a passcode. So just remember 4 digits and it's automatically loaded and you can see your balance as well as that health savings account or that dependent care flexible spending account. So even if you're in all 3 accounts, those will show up and they are different balances and you can see all 3 from your mobile app. One really neat feature of the mobile app is a eligibility scanner. So let's say you're at the pharmacy or even if you're at Walmart or something and you're down the aisle and want to know if, oh, is this sunscreen eligible or is this mouthwash or toothpaste? Use that mobile app to scan the barcode and it will tell you whether or not that is eligible. And just to let you know, the sunscreen is eligible, but that toothpaste and mouthwash is ineligible. So you would know that those you need to pay not using your flexible spending account or health savings account. You can download that once you're in the account and set that up, and it's free from whether you use Google Play or your App Store for Apple. You can also access your account online if you don't want to use a mobile app and use your computer or tablet. And that's where you can download a lot of the forms, as well as that beneficiary form for the health savings account. You can set up your direct deposit. Okay, what do I do next? So first thing is I suggest reviewing all your options. You have a lot of different options available to you. If you are enrolling in a medical plan that is not a high deductible health plan, you can enroll in either the flexible spending account for healthcare or dependent care if you have those types of expenses. If you think you might want to enroll, or you already know you want to enroll in the high deductible health plan, you'll automatically be enrolled in that health savings account. But be sure you review whether you're eligible for the health savings account based on some of those IRS rules, and then make a decision as to whether or not you maybe want to supplement that health savings account with that limited purpose flexible spending account for those dental and vision expenses that you and your family may be incurring next year. Use all the tools that are available to you on our website. Use that tax savings calculator. Use that budgeting worksheet to make sure that you're getting the maximum tax savings that you can for the year. And then make sure you do your open enrollment and elect those accounts. Again, if you are new to the account, especially the flexible spending account, and you're unsure of whether it's going to work for you, sign up for the minimum, which is only $120 a year, that's only $10 a month coming out of your check. You at least get that tax savings, and you can kind of use 2021 as a test year to see if that really works for you. And then if it really does, and you know that you're going to have a lot more than the 120 for the year in expenses for you and your family, then the following year for 2022, then you can certainly enroll in that. At this point, I'm going to open it up for the questions. So go ahead, if you haven't done so already, type those questions into the chat, and I'm happy to help.
And Sherry, we do have one question. It says,
okay.
Grace period the same for the dependent daycare FSA?
Yes, the grace period is for any of those the flexible spending account for daycare, as well as that healthcare, so limited purpose, as well as the full flexible spending account. So you get those additional 2.5 months for any of the accounts.
Great. And then another question. My husband and I have been in the high deductible healthcare plan for the past 2 years, and we have an HSA. What will happen to our HSA account if we decide to move into the next level of healthcare plan? Can I choose to deposit money in it?
Your health savings account you cannot add contributions any longer if you're no longer in your high deductible health plan. So if you switch to the regular plan, I don't know the names of the UVA plans, but it's not a high deductible plan, you won't lose that money. You can continue to use that health savings account for eligible expenses, but you cannot continue to contribute because the IRS does limit that to only those people that are actively in that high deductible health plan.
And one more, are there HSA account maintenance fees if we leave UVA?
Yes, if you're not, well, even if you stay with UVA, but in that previous question, if you move to a non-high deductible health plan, so you're not considered an active member of the high deductible health plan, you could remain with Charles Snyder with your health savings account, but there is a $4 a month maintenance fee. But you can continue to use that until it's down to zero. You can also transfer it to a different HSA if you would happen to go to an employer that did have that high deductible health plan option and didn't use Charles Snyder for their HSA vendor.
And another one, can you file a claim for expense if the funds have not been deducted from your paycheck yet?
Okay, it's a little bit different depending on the account you're in, so I'll do 3 examples. If you're in the healthcare flexible spending account, so either that limited purpose for dental and vision or the full FSA for healthcare, the funds that you elect for the year are automatically, the entire amount is loaded to the card on January 1. So those funds are available to you immediately. If you're in the dependent care flexible spending account, you don't have those funds available to you until you have the payroll deduction. And the health savings account, if you contribute or your employer contributes, those also are not available until that payroll. So in the example of if you want to file a claim or use the debit card for those healthcare flexible spending accounts, you have that money available immediately. So if you've elected $1,200 for the year and January 15th, you have a $300 eligible expense, you have that money available. But if you're wanting to pay for daycare, you do need to realize that you don't have that money until your first payroll of the year. So there is a little bit of budgeting involved in there, and you need to kind of plan that out when you're signing up for the account. The same with the health savings account.
Great, thank you, Sherry. If there's no other questions, I will just, I'll give everyone just a minute to type just in case, but I just wanted to say if you haven't already, please check out the virtual expo. There's a lot of great information. I know that within the benefits administration tile, there's also a few videos that even talk about FSA and HSA that are really short clips, and then there's contact information that's loaded within the tiles as well. So definitely take some time to go through that. That will be open until October 16th. And it doesn't look like we have any more questions. So thank you, Sherry, for your time. And
thank you all.
Have
a great day.